Should you buy oil stocks now, in particular May 2020? In this video, you're going to learn about oil stocks and whether to invest in them right now. Disclaimer, I'm not a financial advisor. If you seek financial advice, please see a licensed professional. Do bear in mind that I'm not talking about buying oil Brent by the barrel, where you would have to purchase it and find a place to store it yourself. I'm typically looking as a retail investor whether it is worthwhile to purchase stocks of oil companies listed on the exchange. And I'm looking at stocks and seeing whether it's worth the high risk that is now associated with them, and is it worth the buy? In recent news, you may have heard that Shell has cut their dividend, which is something they hadn't done since World War II. I mean, I was very confident about it in one of my previous videos. I thought, oh, there's no way they'd cut their dividend. Well, they did. And it's honestly for the best. And now there's a lot of pressure on the other companies to cut their dividends too. It's going to present a significant buying opportunity. So should you buy now? In the last few days, particularly weeks and even months, and I mean, yeah, you could say years as well with the UK markets in particular surrounding Brexit. But oil stocks have been plummeting as of more recently, and this is due to the Saudi Arabia-Russia oil price war. Now, they had negotiated and slowed down a bit, but I'm pretty sure there was like a dissolvement in that agreement and they started doing it again. I'm not completely sure on the matter. What I do know is that oil stocks are extremely cheap at the moment. In a downturn, you want to look for the ones that have dropped the most, as they present the highest buying opportunities and therefore can present you with a higher return. And in particular, the sector that's probably been hit one of the most is energy, along with travel and financial. But energy has been hit very hard. There's been multiple problems, including the current pandemic, the uncertainty around Brexit, speaking particularly about BP. There's also been the oil war. So all of these have been compounding and they've been pushing the price really low. So this might be the time to buy, and we might not see another buying opportunity. So what options should you consider? And this oil price war likely means that a lot of smaller companies are going to lose their revenue and subsequently fall out of business and lose their business. So personally, I only really think it's safer to invest in the 6 or 7 major oil companies. Whilst yes, we do have some oil and gas companies in the FTSE 250, the chances of them dissolving might be higher than that of the bigger oil companies. And so the only way to be sure that we can survive this is to invest with the bigger oil companies. And being a UK investor, that really leaves me down to 2. We've got BP and Shell. Both of these are listed on the FTSE 100 exchange. Obviously, there would be a shout out to the FTSE 250 constituent diversified oil and gas. However, I just want to look at the 2 big companies. I believe they're the safest and can offer the greatest returns. And I think that these bigger, major oil companies will be able to capitalize on this once the war is over, and they can expand with growth and then slowly work towards their goals. And however, choosing these companies depends on what you think will happen in the future. Do you think oil will be around for the next 50 to 100 years and we will be relying primarily on it in our future, in our businesses, in our traveling and all of that? If you believe that oil will still be the main source of fuel, then perhaps that's what you want to see. You want to look for companies that share that same outlook. However, if you feel that maybe we're going to go a bit more green in the future, might be more carbon neutrality, which means that there'll be less carbon output for the carbon taken in during the reaction of process of distilling oil? Or do you think we'll start to rely on more renewable energy sources such as hydroelectric dams, tidal power, I believe wave power, wind power, and also solar? Do you think we're going to start relying on renewables a bit more and therefore seeing a drop off in the demand of oil? I mean, already we've seen Tesla with their electric cars that don't rely on oil directly as fuel or gasoline, but they do, however, require it in the process of creating energy. Well, depending on where the energy is coming from, but I believe in the UK, we only have around about 9 to 10% that we can actually use with renewable energy. And the advantages of obviously oil, the non-renewable, is that we can store it. With the renewable energy, we can't really store it. I would like to talk about their strategies. So what is their strategy now that they've cut their dividend defensively? They want to continue as a leading energy company and grow their customer-facing businesses, such as their petrol pumps. And they want to improve that in the future. They're also looking towards carbon neutrality, or they want to reduce their overall carbon emissions, as they do believe oil will be used in the future. They want to reduce their net carbon footprint of the products they sell. So they want to take a positive step towards reducing their carbon dioxide emissions. So Shell is very interested in continuing their oil business and expanding upon that. And they want to refine more on their process. They want to make it better for the environment, but they don't seem to be looking outwards. They seem to be quite strong or bullish on oil. They want to continue producing oil and therefore make their money like that. So if you think oil is a worthwhile investment in the long term, and you believe that we still will be reliant on it in the next 50 to 100 years, then maybe Shell is the pick for you. And you should note that currently there is about a 45 to 55% drop from its highest value in July 2019. So maybe that's something to think about, should you buy Shell. And if you're interested in which stocks I'm watching in May 2020, click the card at the top right of the video to find out. So BP's strategy is to continue developing their strong foundation, but they also look to expand outward a bit. So they aim to increase their low carbon agenda and plan to become a carbon zero company by 2050. A long-term goal, because obviously a long-term investment of 30 years would be incredible, and obviously if you invested now, this would be 30 years time, and I think that's a good step. I believe that since they're planning to go to net zero, they're also looking at more renewable energy streams. They have said that they want to improve their oil process and make more cash flow from it, same as Shell, but they want to expand out. They want to not only reduce the carbon footprint in their process, but also manage their portfolio so that they have a wider stream of energy sources, such as more renewables. And in September 2020, they plan to release this data onto their website. So rather than purely planning on the development of oil and the growth of it, they're looking to expand outwards. Maybe they don't see oil being used as much in the future. Obviously, they still plan on using it, as they said they only want to go to carbon zero. So obviously they're still going to be producing it, but they plan to make money from their energy and other sources, because inevitably, I do believe oil will be used for the next 100 years, because the process of fractional distillation, where the oil is split into many different products, those products have a lot of uses. For instance, you've got bitumen, which is road tar, you've got gasoline, you've got kerosene, which is jet fuel, I believe. I may be wrong on that one though. And therefore, oil will still be produced until we find an innovative new way to improve all of our technologies and how we use energy as a whole. And I do believe BP will capitalize on this and manage their portfolio like so. But with Shell cutting its dividend, there's been a lot of advice about Chevron and Shell to also and BP, to also cut their dividends. And I do believe BP to have significant risk now, as earlier this week they had confirmed that they were planning to pay their dividend, but perhaps they need to rethink this, as this could be a very demanding situation for the oil company. But it also must be noted that with BP, the renewable sector might be less profitable. It might not be as rewarding, so they could still grow, but they could also still have some issues in the future about it. So it's about where you think the company will be long term. And I believe there's a lot of value to be taken with this current pandemic crisis. And now that the quarter results are being released, I believe the market may downturn again. And whilst the value is there, you should take it. So I'm personally going to invest quite a lot in the energy sector, but that's based on my understandings and what I think of oil and energy in the future. I am planning to increase my dividend growth free trade portfolio, and I'm going to increase my allocation to energy in the short term until maybe perhaps next year we see stocks rise again, and then I'll look for weakened sectors that haven't risen as much and buy into them. So thank you for watching. I'm Osborne Foreman. Have a good night.